Welcome to the New York Outlook for Friday, the 22nd of December. Starting off with the economic calendar, as you can see for this Friday afternoon, we've got some USD red folder significant news. This is PCE price index and UOM consumer sentiment, the revised version. I guess the only thing to note in this regard is when the news is released, manage your open positions appropriately, and if you're going to take new trades, ensure that it is aligned to the actual news release. As you know, I do have a trade open from London, and it's currently break even, which is good and in profits, but dependent on the news release, it's either we're going to keep the trades open or we're going to close them out. So that's how I'd approach it. The next consideration is whether we can potentially get into a second position, but I guess we'll have to wait and see. In terms of the charts themselves, um, on the 4 hour, nothing much has changed. We have continued to push to the upside, and our primary leg has continued to grow. In the current day, essentially expanding, and that essentially meant or supported why we could actually anchor our FIB to the current low of the day on the assumption that this Asia low of the day will actually hold. Um, the other thing that's I guess quite interesting to note is the fact that we didn't have liquidity in the leg, and like I said, liquidity in the leg isn't actually a requirement for entry. It's more so whether whether you're comfortable with the stop loss size, and then over and above that, it's a question of risk reward and whether you would be comfortable with potentially missing a trade because you're waiting for liquidity in the leg or similar. In terms of the trade we did take, you can see when we came in, like I said, I used the range because it made a lot more sense than trying to use a refined OB. But what you can see is that we didn't actually take liquidity in the leg. However, on the 5 minute, we did build some liquidity to the left, or to the right, should I rather say, um, like here, and then there was some liquidity to the leg built right there because you got that body closure, and then I guess subsequent to that, from that point onwards, we came down. But yeah, we didn't again create liquidity in the leg to then actually support why we're coming this far down. Liquidity in a leg, like I said, is a bit subjective, and it's more about ensuring that your stop loss is placed correctly. So if there's no liquidity in the leg, and there's areas where price may come down to actually take liquidity in the leg, then you probably want to make sure that you cover the low of the day, and also give it some breathing room. And then the other aspect would be, if you are taking liquidity in the leg, then you can be a bit more aggressive with your stop loss size, just because you don't actually need more liquidity to be taken, and it's more likely than not that price will actually go from there. So that's just something I thought worth mentioning. Other than that, that's pretty much the end of the outlook for today. um, I guess the other thing I wanted to mention is that from next week onwards, well, pretty much for the next 2 weeks, I won't be doing London and New York outlooks just because of the holidays and then also low volume. So I'll resume the outlooks likely from the 8th of January, but I will continue doing end of day reviews every trading every trading day. Just to add on to the outlook, because I tended to, well, I actually forgot to cover the continuation section of the outlook, but um, whilst I guess what I do want to point out is the fact that we actually have extended the primary leg in the session, and whilst in terms of the 15 minute, this is the valid POI to trade from, there are 5 minute POIs that we can trade from, and that's purely based on the fact that we only have one real direction to trade, and any of the POIs within the primary leg are indeed valid to trade. Our FIB will be anchored to the low of the day right here and the extreme, and then we can obviously find one of the fibs in a POI to align. But there's a couple of considerations we need to take into account. The first being the London range. So New York has opened, and in terms of London based trading, we typically don't trade from the 50% level. We wait for for something deeper. In terms of actually trading from this level, I mean, it's you could, but your stop loss would be really large. Something like that would be your stop loss potentially. However, what's more favorable, especially because these POIs are actually validated before the law, it would be more favorable to maybe trade from this POI with your stop loss at the 11% level, just because of the fact of the large stop loss, and we only have one direction to trade in, so it makes sense from a risk perspective. Um, yeah, and then from a New York perspective, this trade doesn't make sense at all. And the reason why I'm saying that is that one side of the London range, well, when New York opens, we have to consider the previous session range liquidity, and at this point, we're trading in the middle of the previous session range, and we can't say for sure, or it's somewhat questionable whether we're actually going to take out the London range high. Usually, my trade plan rule is actually to wait for previous session liquidity to be liquidated before actually taking any entries. So, for example, in this trade, the Frankfurt triggered trade, I did actually wait for Asia range liquidity to be swept, and then I considered the entry, even though this entry point, is technically valid already. Um, and then from this perspective, unless you're actually willing to trade based on this liquidity being swept, and you're saying that the 50% level is sufficient for you, or maybe you want a smaller stop loss and you're using that as your stop loss level, this fib level as a stop loss level, then maybe you can argue it because of the fact that this trade is break even, and if price is going to come out and take you break even out here, then you probably don't want to be in this trade, as this signs that things are changing. But yeah, for the purposes of taking any New York continuations, you definitely want to wait for the London range to be taken out, and then obviously then it becomes a question of does it still make sense? Have we moved potentially too far um, in terms of the daily range? Maybe continuations stop making sense. Yeah, so those are just some of the considerations to take into account. But yeah, I tended to forget to cover that, but overall we'll chat for the end of day review later.